It's great to have you join us. I'm Ladi Williams. Let's get a check on what's happening with metals. Now, see gold prices ease today, but on track for a weekly gain as investors sought the safe haven metal with rising geopolitical tension, while palladium was poised for its strongest week in more than a month. So we see a pullback there, 0.2%. That's for spot gold, $2,730 per ounce. Then the U.S. gold futures, that's standing at $2,742 per ounce, down 0.2%. It's been a monster run there for the yellow metal. That's gold. Let's get a check on other metals in the market. Now, we see the likes of palladium following that drop, 0.4%, $1,057. Platinum, a big drop, 0.7%, $1,152 per ounce. And we see silver also getting a pullback there, 0.3%, $33.62 per ounce. So we're seeing weakness for this last trading session. That's for the week. But on the summary there for the whole week, we know it's a weekly gain for most of these metals that we track. Let's get a check on oil now. We're seeing oil prices still managing to hold up. I did nudge higher today, $74.69 a barrel. That's for Brent, 0.4%. Same gain there for WTI, that's the US grade, $70.48 a barrel. I'm still holding on to that $70 level. We'll see the spread between both, about $4 spread. Gaza ceasefire talks in coming days, that's driving sentiment there in the market. There might be some kind of de-escalation, but traders are betting that there might be escalation, depending on what Israel, does next. There's still going to be heightened tensions in the Middle East. So traders are waiting for Israel's response now to that missile attack by Iran. That was October 1st. That may involve hitting Tehran's oil infrastructure. All right, let's get checking on the stories now. To Nigeria's financial services sector, we see demand is rising this moment, and stakeholders are calling for collaboration to secure Nigeria's payment architecture. According to the CEO, Zojapay, Mr. Dada Olusegun, telcos, banks, and fintechs must collaborate to achieve a seamless payment system. I had a chat with him earlier on Business Morning. Take a listen.
Security is a major concern, and it's everything in payments. And again, without trust, nothing would work. And this issue you just mentioned right now is a major concern. But however, with the emerging technologies we have happening, such as the AI, we can be able to use this currently to be able to detect frauds, whereby we are able to keep eyes on various forms of every transactions and even patterns that occurs. So with such that you mentioned right now, it can, with AI-powered fraud detection system, you can be able to detect any form of anomalies and can be able to even stop such account or transactions from being happening. So that is currently in place. And another aspect is also the aspect of collaboration. For example, among the banks, fintech, and also the telcos, whereby when data are being shared around fraud trends, I believe everyone wins. I don't think it's all a matter of, something is happening, people keep it to themselves. We need to share data, we need to share information, and be able to ensure that we're able to achieve that synergy, that environment whereby security is everyone's concern.
And to promote ease of doing business, the board chairman, Odua, is saying that's Mr. Bimbo Ashiru is noting that for businesses to thrive, government needs to synergize with the private sector for the smooth running of such businesses and to push for sustainability. He made the comments earlier, that was yesterday. Take a listen.
Government has no business in business. Governments must create that enabling environment for business to thrive. And how do you do that? Ensure, ease of doing business is very key. Once you create that enabling environment for them and you protect, you see, the bane of this thing is the fact that people don't listen and watch. You have to look at the dynamics, look at what the businesses want, what the investors want. An investor is very selfish because they want to be sure that their business is protected and they want to have enhanced return on their investment. So if you don't have enough, how will you do that? And what government needs to do now is to ensure that many of these laws are created to make things easy for them, to protect them. But as a regional government, I can tell you, I remember our last visit to the Vice President, He said Odua investment is the only regional investment in the whole of this country that is still existing, and not only that it's existing, it's waxing stronger. So the most important thing is that means I want to commend the shareholders, the 6 Southwest governors. You see, don't forget that Odua is owned by the 4th largest economy in Africa. By choosing the right caliber of people to maintain and to be on the board. So with this kind of people, different, diverse, people that have unblemished track records in their chosen careers. So they are now doing the job, walking the talk, ensuring that we sustain that legacy. And what government needs to do is to sustain it. Like I said earlier, sustainability is very important. If we cannot sustain whatever we have, there's no way we can move forward.
All right, join us review what played out in the FX market this week. We have Mr. Oladipo Jai is a head fixed income and FX at Chapel Hill Denham, joining us this afternoon. Great to have you on the show.
Yeah, good afternoon. Thank you very much for having me.
Yes, and it's been quite the week for the Naira. You know, in the market, we've seen a lot of demand. Sometimes they say supply is not meeting up with that demand. But how would you describe the performance of Naira in the official window and also in the parallel market?
Well, in the parallel market, we will say that it's been a week of beating for Naira. We've seen Naira plummet and actually cross the 1,700 mark. And currently, Naira is trading around the 1,740. In the parallel market. And but when you now compare to what's happening in the official window, currently now is around 1,160. When you're looking at the NAPEM window, it closed at 1,601.20 kobo yesterday. But don't forget that this week we've seen the central bank actually intervening in the market about 3 times this week. And I think that's one of the reasons why we've not seen Naira actually being beating aggressively in the official window compared to what we saw, what we are seeing in the parallel market. So for me, I think it's intervention, and the central bank has not done anything around BDC sale in the last 2 weeks, and I think that's also one of the reasons why we've not seen any impact at the parallel window.
So that means we need to see some action, you know, when it comes to what the CBN is selling to BDCs to keep that segment, you know, of the market stable. But looking at that gap between the parallel and the official window, do you still see that gap, you know, close, you know, going forward?
Yeah, I think one of the problems is I think it's more like the modality that the CBN is currently adopting currently. And for me, I also think that Naira would have done better in the official window if central bank replicates what they did in the month of August. And Ladi, don't forget, in the month of August, the central bank was in the market. They actually conducted retail DAS system where banks submitted the bids for their customer, and the central bank actually sold 50% or met 50% of demand at that particular point in time. And I must tell you, in the next 3 weeks, we saw a great respite on Naira. And but since then, what the central bank has been doing is just to actually sell into the bank market. And I don't think that will be effective enough to actually help keep the currency stable, because at the end of the day, the real user of the fund may not actually get allocation directly from the bank. So the central bank needs to find a way to ensure that this allocation get directly to the end user. And on the parallel market, I think it's taken too long around this BDC reform. By now, we should have gotten to a level where we now know the actual number of BDC that's working with central bank. And also, the central bank can then now actually allocate on a weekly basis to some of these BDC so as to help to meet the needs of people that actually needs funds for invisible. There are people that want to pay school fees. There are people that are traveling. There are people that are going for medical tourism. And just last week, the central bank governor actually mentioned that they actually allocated over $2.5 billion for medical tourism this year. But my question is that in what window was that actually allocated? Because yet we are still seeing pressure at the parallel market. So the central bank needs to find a way to cater for these people that are actually going to the parallel market to actually meet their demand. Because if they fail to do that, we'll continue to see that gap actually expand further.
Right, and we see, the central bank intervening every now and then in the market, but at the same time, we see the central bank governor saying that our foreign reserves hit about $40 billion. So what does that tell us? We see interventions, and we're still seeing a rise in our foreign exchange, Forex reserves. What was that telling us?
So I think there was a question that was posted to the central bank governor at Washington, D.C. Sometime this week around the fact that the reserve is going up, and but yet does it mean that the central bank is not actually catering for the market appropriately? Because if your currency is suffering and at the same time your reserve is growing, it doesn't. There's no correlation between that, because when you see improved reserve, it simply means that you expect the currency to appreciate. And the response was the fact that they, for a long time, decided not to actually intervene in the market aggressively, knowing fully well they want market to determine the current prices. And I think that's one of the things that the central bank is doing currently. But I'm not in support of that, because my view is that you can't continue to actually increase your reserve and your currency continue to actually suffer in that regard. And don't also forget there's this pass-through effect of depreciated currency. And you are fighting inflation, but at the same time, you are allowing your currency to depreciate. I don't think that's the best way to actually run the economy. I think the central bank needs to actually rise up to that occasion. There's no reason why you are keeping the dollar when the needs is out there. It's better you actually allocate for people that actually need this one, so as to help to actually stem the current aggressive tide on the currency.
All right, so for this fourth quarter, do you see any catalysts coming that could boost demand for the naira, or do you see more demand for dollars in this fourth quarter?
Well, I think there will be demand for dollars, and that's certain. Knowing fully well that you are getting closer to the end of the year, and there's a peculiarity of demand around the unitary period. Nigeria is not that big productive country, so it means that most of what we consume in that season need to be imported, and as a result, you expect to see more demand in the CBN window. So, but the other side is that is the central bank ready to actually rise up to the occasion to actually ensure that they actually supply appropriately to buyers of the FX. I feel that the central bank needs to do that in such a time like this because, like I said earlier on, there's no reason actually keeping the currency, increasing your reserve when you know that there's need out there. So I expect more demand at the later part of the year, and but in terms of FX revenue, I don't think we're expecting any sizable revenue except.
All right,
central bank. The government decided to actually visit the international market.
All right, yeah. So
like
I lost you for a moment, but you're back now. You can conclude your thought.
So I said that we are not expecting any sizable FX inflow, except we decide to actually go back into the Eurobond market for bond issuance.
All right, let's. We've seen that the Dangote refinery is going to be able to purchase oil now. With Naira, and definitely that's supposed to reduce the pressure, on the Naira. But do you see that? Really, creating that demand that we're looking for the Naira?
Well, I think one way or the other, it will moderate the pressure in terms of, because when we look at the need for dollar by all these oil markets, it's on a daily basis need because of the daily consumption of PMS, diesel, and the likes. So one way or the other, that will actually reduce the demand in that window. But the flip side of it is that what would have normally come to us as FX revenue is not coming to us as FX revenue again. So you have to come in Naira because the agreement is the supply of crude for Naira. So it simply means that what you would normally have sold into the national market for a dollar revenue, now you are selling into a local market for a Naira revenue. One way or the other, it will match out the demand that you used to see in that window. But however, when you look at both sides, one way or the other, it's still better because there will be little respite compared to where we used to be.
Right, and I'm sure we need to see more of that demand for the naira, going forward at this time to help reduce all of that pressure. But we've seen comments out from the central bank's MPC, the last rate-setting meeting, and consensus is all of them. It was unanimous. Raise rates, at that meeting, and from what we're seeing for forward guidance, it seems like rates will continue to go up, at this time. But talk to me about the last move, by the MPC and what you're expecting for the last meeting in 2024.
Well, the last meeting actually, the decision actually took a lot of people aback, and one of the reasons was that when we saw 2 months of disinflation, a lot of people were of the view that it would be a time where the monetary policy guys need to actually reduce their hawkishness. But when we saw another 50 basis point rate hike, and it's not only even the 50 basis points, it's the fact that the CRR was now taken up from 45% to 50%. That's another 500 basis points in that regard. So it simply means that the central bank went all out hawkish to actually stifle the economy of liquidity, so to actually rein in inflationary pressure. And for us, in retrospect now, I think they made the right decision because I guess they factored in the fact that at a point in time, by the end of the month of September into the early October, the commencement of these local production of PMS and the impact of price. And I think that's one of the reasons why they actually told that line. Currently, we are seeing it clearly where PMS is currently, and we saw the inflation figure for the month of September, where inflation now on the rise again. So for me, I think that in the month of November, I think they will be less hawkish than what we saw in the month of September. So I would take a bet around a 25 to 50 basis point hike, considering the fact that the economy is looking heated up already.
Right. From what you're seeing so far, when do you think we can start to see reasonable progress when it comes to this fight against inflation? Do you think we're going to see that in 2025, or is it 2026, or what do you think? Is this going to stay with us for the longest time?
No, I think from 2025 we will actually see respite, and if you look at where we were in the month of July and August, is a point out the fact that we're already on the right track before the readjustments of the PMS price, and that actually fueled another round of inflationary pressure. And I think that in no time this will wane out, and after this, I expect us to move to a level where we'll start seeing a bit of respite in terms of food pricing. And also another thing is the fact that the fiscal policy guys also, though they were not proactive, they were reactionary. But one of the things they are doing currently is to actually remove excess duty on some of these imported raw material products that actually could actually fuel inflationary pressure or on food items generally. And also another thing is the fact to actually ensure ease of transportation of goods from the north down to the south, and also creating special security apparatus to actually work in states that are producing food for the nation. So these are some of the things that they are currently doing, and I think we'll start seeing the result in no time. And the result is the fact that the price of food item will actually drop, and when the price of food item drop, the impact will be that that will also affect the headline inflation positively. And also, when we start seeing stability of currency as well, the pass-through effect of inflation through FX also, that one will also disappear. And I think when we look at all these things all together, I feel that before the end of Q1 in 2025, we'll start seeing respite.
Right, and talking about food prices and inflation and all of that, we see the National Bureau of Statistics is planning to rebase the GDP and CPI. That's for November. What do you think this will do to the data that we normally get, when it comes to inflation data and GDP? Do you see, big changes, coming with that data, and how do you see it influencing, what the policymakers are going to do going forward?
Well, rebasing of CPI and GDP is a norm in the market, and because when you look at the base year you've been using, you get to a level that it doesn't sound reasonable again. Imagine you still using a base year of 1995 in such a time like this. So it already tells you that whatever measures you are taking may not be realistic, and that's one of the reasons why actually I supported the decision of MBS in this regard. So what it will mean is that it will give us the reality of the time we have, and also there will be a regime change in terms of the period where this data is covered. And but at the end of the day, it gives us a true picture of where we are supposed to be. Normally, and I think that's one of the things that MBS needs to actually come out to, so that people will not think that it's more like data mining or doctoring data. What they need to do is that make sure that there's a static timeline around it, that every five years we'll rebase. So with that, it's scientific. So everybody knows that we are rebasing in 2024. So it means that the next time we are rebasing will be 2029. So when you are doing that in 2029, nobody will look at it as a way to actually doctor data. So I think that's one of the ways to actually ensure the credibility of such data.
All right, thank you so much. Always great having a perspective. Oladipo Ajayi, head fixed income and FX at Chapel Hill Denham. Thank you so much.
You're welcome. Thank you very much, Oladipo, for having me.
All right, let's get a quick check on what's playing out to most of the markets we track globally, and our local bourse right here. We see it's marginally down 0.04%. That's for the NGX, but still holding on to that 99,000 level. That's for the All-Share Index. In South Africa, it's a different picture there, 0.11% up, 87,000 points. Other markets we track, we see for North Africa, the EGX 30, 0.46%. That was the close for Thursday. And for Nairobi, close for Thursday was 0.86% down, but still holding on to 114 points. Let's get a check on what's happening in the U.S. now. We see S&P futures are muted, this morning after a broad index ended a three-day negative streak there. So we see the Dow Jones Industrial Average 0.03%, marginal gain this morning, but still in the green. I'm sure some investors will take that. NASDAQ 20,416 points, 0.18% up, and the S&P futures 5,855 points, 0.11%. But let's get a summary of yesterday's close from our correspondent, Maria Baird.
The U.S. stock market had a mixed day on Thursday as the Dow Jones had a bit of a dip. Even though it did recover from what it saw earlier in the day, it still closed a bit lower, 0.3% under. And the S&P 500 had dipped into the red during the day, but was able to recover and slightly above flatline at 0.2% up. And the heavy tech NASDAQ led the way with earnings as it was 0.8% up. Companies like Tesla showed great rebounds. This allowed the heavy tech NASDAQ to show some major gains, as Tesla was up more than it had been in more than a year. It is clear that the U.S. stock market showed some bit of concern, but investors were still waiting out the day and showing that it could be some recovery in the near future.
Thanks, Maria. Now for a quick check on Asia. Now let's see what's playing out in Asia. Now see the Nikkei closed 0.60%. Down, Kospi up 0.87%. Hang Seng Index 20,614 points. Other markets we track there from the Nifty 50 in India 1.09%. Shanghai Composite 3,299 points. So it's a mixed picture in most of the markets that we track in Asia. So they're closed for now. We'll see how it plays out for next week, if there's any kind of catalyst that will push investor sentiment. But now, I told you, Inijom Mekwa, she's still in D.C. and she's covering the IMF World Bank annual meeting, sending us informative reports. She joins us now for a review. Great to have you, Ini.
Hi, Laddie. Good to be here. Well, I can't help but notice that the market, the NGX, has gone up to 99,000 in my absence. I don't know if to say that's good news or heartbreaking. I would have loved to see it, but I hope it stays there until I'm back.
Yes, because we're seeing a little weakness right now, but who knows? It might change, by the close of trade today. But we're still holding that 99,000 points. But away from the markets now, and I know there's a debate on tackling the global economy's low growth but high debt, combination. That was, highlighted there with most of the conversations there. But what did you make of what was said, by the IMF?
So, Ladi, it's a lot of conversation right here, as you would imagine. Usually, that's what it is. But just as I said when we had this conversation earlier in the week, things are changing. The fragmented trade relations is topping the agenda and posing new challenges to global financial institutions. And it does seem like even the low-income countries are getting more voices and asking for even more, which is where the reform comes in. And then, so you see a lot of low-income countries represented here. Then they didn't come all the way here, just to maybe. I haven't heard of debt forgiveness, which is one thing that used to be common. So even though you do have debt distress in some countries, especially sub-Saharan African and those African countries, I don't hear a lot of begging for debts to be forgiven. Now, what it seems, the reform that they're talking about now is how to make the burden or even the accumulation of the debt even easier. So there are talks about interest rates of loans to be gotten and funding and financing given from both the IMF and the World Bank. So if these are poor countries, why burden them with so much interest rates and also penalties for not meeting up with some financial obligations? So these are the kind of reforms that are being put on the table, and we expect that will make a part of the reform because the calculation is that by this time next year, by the next annual meeting, we would have a major guide and direction as to the new phase of both IMF and the World Bank in their restructuring and reform process. But Ladi, that's only on the one side. Countries are also using this opportunity to try to connect, to attract capital and funding to their domestic economy. Nigeria is one of that. So there was a meeting 2 days ago where Nigeria's economic managers, the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale, as well as Nigeria's central bank governor, they had representative of investment banks and countries, and they sought to allay any fear they might have. I mean, we know the reality in Nigeria with the current economic reforms going on, subsidy removal and subsidy in one way or the other, not just on petrol, but you also have the one on foreign exchange. Well, the minister told us that it's finally been removed as of October the 2nd, so not May 29 as the president had said. So all of this obviously has sent some shocks and fears and uncertainty into the mind of investors outside the country. So that meeting was actually to try to calm nerves and explain some of the things that may have been achieved up till now.
Right.
And also give investors certainty that, if you come to Nigeria, policy and all, you are safe.
Right. I know the investors need all the care right now, to make them feel, comfortable. I know other central bankers were there, and I know you had a chat with Mr. Garang. He's the governor of the Bank of South Sudan. That's James Alik Garang. Let's listen to what played out there.
The key theme this time around focused on what needs to be done to secure the soft lending. That means after all the crisis, from the pandemic, from the regional and global tension that we're seeing today, and from the wars that we see in Europe and the Middle East, whether the economic outlook has turned out to be what it was perceived 3 years ago. And what the discussion today is around that the situation is such that the global economy, the growth, is resilient and improving, but not even. So that means there are some regions, there are some countries where the economic growth prospects are very positive, but there are also other regions where the growth dynamics are not favorable. So that's the headline message. The second headline message is on inflation. Inflation is trending down generally on the average, but it's not trending down everywhere. If we bring it down to the region, let's say in Sub-Saharan Africa, inflation remains very high in most places. On the issue of the financial sector, at the global level, risks have shifted from places where they used not to be to the place where they are today. Let's say in the real estate. This has to do, for example, with Asia, including China. So there are pockets of vulnerabilities in the financial sector that need to be looked at. Now there are major challenges, from climate change to geopolitical tension to the wars to the few outbreaks of diseases such as the chicken pox, the smallpox, for example, and a few others, and the volatility that we see in the financial sector, from asset prices to commodities prices. So those are the headline messages, some of which are challenges. Now, what are the prepared policy options that are laid out there for policymakers to look at? There are a range of policy options across 4 broad areas: one on fiscal policy, one on monetary policy, on financial sector policy, on structural policy. Without going in depth, I will just highlight a few of those. On the fiscal side, the key recommendations are a need for authorities to build buffers, to create fiscal space, and to also to ensure debt sustainability. On the monetary policy front, the policy push is on the need to recalibrate and communicate monetary policy, and at the same time, do everything possible within our powers to ensure that we mitigate the volatility that we see in the foreign exchange market. Then finally, of course, along this line is to protect the central bank autonomy. Because when central banks are independent, they do things that are in the best interest of everyone. And then on the structural front, the push has been on the need to uplift or improve productivity, attract capital, and then ensure that we move along the same line of digitalizing or strengthening the digital processes, and then of course also work on policies that are there to ensure green transition. On the side of the financial sector, the key message has been to strengthen resilience and stand ready to respond when those pockets of vulnerabilities do arise. As I have said earlier, traditionally, you have sectors where risks are, but today some risks have shifted to the real sector, to the housing sector, and more so in emerging economies. These are the headline challenges and the headline messages. Okay, now, for Africa, the biggest development, the biggest positive news so far has been the addition of a third share at the side of the IMF. Sub-Saharan Africa, I could say, since 1979, on the IMF side, has been pushing to increase our voice, to increase our representation, and to sit at the table. And one of those has been the endorsement by the IMF board during this annual meeting that by November 5th, Africa will have 3 shares. There will be Group 1, Group 2, and Group 3. Traditionally, they used to be clustered along the Francophone and English speaking. But with the addition of third share, it's not so much about languages now, it's so much about the region. So we have the West Africa group, the Southern Africa group, and the Central and East Africa group. So these are the three shares. So we are very happy that our call, a long-standing call, for almost now, almost 50 years, we have been calling for a seat, one more seat to be added. And this time, African ministers of finance and central bank governors were able to push this. and it has gone through. So this is one of the biggest achievements that has happened so far.
And yes, that was the governor of the Bank of South Sudan, James Ali Garang. So, definitely, other central bankers and ministers of finance had a lot to say, at the meeting. So, talk to me about if you're gauging the pulse of investors there, their reaction to, most of these other countries.
Well, Ladi, first of all, I would like to just, comment a bit about what the South Sudan Bank governor talked about, which is victory for Africa, gaining an additional chair, so that means an additional voice. So before now, we know that there's been talks as in is Africa, or at least the low-income income countries, are they being fairly treated by the two Bretton Woods institutions? And the notion or the perspective had been that because you don't have enough voice, then how can you be heard? So obviously it's a congratulation for Africa with this extra quota seat, so you have more representation right there at the meetings, you have more voices and all of that. And remember, I also did tell you that one of the reforms that is being asked for is the issue of a quota, even among member countries. So that's on the one side. But there's also still the issue of rating, credit rating. I remember in Marrakesh, the last annual meeting, that came up. And then they were like, so who are those who are rating the African countries? What information are they exposed to? How do they get the information? How are we sure that the information they're sharing is representing the reality? I mean, these are representative of the Western world. How much do they really know to rate the African countries? So that is still a battle that hasn't been won yet by the African countries. But I mean, with the reforms going on, consultations are going on, perhaps by this time next year, we hope to hear good news. Now, about other countries that are here and investment polls. Well, I tell you, Ladi, we will only know the result of that in maybe the next few months. And it's a global thing now that the world is not in a very rich position. The tension, the war in Ukraine, some of the after effects of COVID-19 is still hitting a country. So even though IMF has said inflation has peaked, and then we expect to see a deceleration, we do know in the low-income countries that, what's inflation in Nigeria? We had 2 months of a reduction, but we are back on the high trend because of the power. And that also brings the issue of subsidy back into the conversation. So we saw that World Bank said that Nigeria lost about over 13 trillion naira because of foreign exchange subsidy. But guess the other side of the conversation. Even in America, there's still subsidy, especially in agriculture. So if the low-income countries are told to eradicate subsidy, what happens to the people in the lower cadre of the economy? How can the government give them a buffer? Everybody's talking about social security, social welfare, and all of that. How can the government, for instance, in a country like Nigeria, where would the savings from the subsidy go to? How will it come back, to the average man on the street? So, Aladi, it's a whole lot going on here. And even though the meeting is ending, I know that the conversations will continue. And then this should feed into what will make up the new phase of IMF and World Bank as they turn 88 decades of operations. Ladi, they have a whole lot of responsibility, many eyes looking up to them. And the issue of financial fairness and treatment is a big one that both Bretton Woods institutions will have to deal with.
Right, and hopefully after all of these conversations, most of the countries calling for fairness and can actually see, that fairness, that they're searching for. And, with all this talk about, the IMF raising alarm about, global debt. So we see it's not just about, your country or where you're from. It's now, debt has become a global, issue at this time. But at the end of the day, it is what it is. The debt is rising, and we need to also see development to match, most of this debt.
Yeah, Ladi. So the issue of debt also, so we've seen a bit of reform happen I talked about the rates earlier. We've seen a bit of reform that has given some buffer to the very indebted countries. We've seen that happen. The rates have been reduced. We've seen SDR, which cost them even less, and all of that. But I mean, I think that the countries will also have to look inwards. The CSOs, some of the CSOs who are here talking about the issue of debt, are saying, okay, so sometimes information about those loans are not shared. We do not know what those funds are supposed to be used for. Can we measure what, if they are really used for what they're supposed to? So you also talk about issue of leakages, even among the debt-stressed countries. So it's not just about asking for debt forgiveness or asking for help. What about domestic funding? What about, they're talking about increasing taxes and taxing the capital of the rich more and all of that. But even after getting the revenue from those taxes, how do we monitor the use of it? Where is accountability and transparency? For a lot of African countries, the issue of leakages and lack of transparency is a major one that draws on the benefits of taxation and also puts the country in a part of debt stress. That's another observation, Ladi, that
Right.
countries also have to look inwards and not just, put everything on the financial institutions.
Right, yeah, definitely. And there's so much to unpack there. And great reporting as usual. And I know you'll be back soon. Don't forget my gift.
Want chocolate?
Whatever it is, I'll take it. Thank you so much, Ini, for giving
All
us
right.
all those details.
Well done, Ladi.
That was Ini John McQuarrie there, giving us the details right there from Washington, D.C. But from there, let's flip over to Europe now. We see German Chancellor Olaf Scholz is meeting with Indian Prime Minister Narendra Modi. India is becoming increasingly important for German businesses amid rising geopolitical tensions between Beijing and the West. DW correspondent Chiponda Chimbelu joins us now. So, Chip, what should we be looking out for?
Thanks for having me. Well, Ladi, Germany's Chancellor Olaf Scholz is on a 3-day visit to India, and he is traveling with a delegation of ministers and business representatives. Now, as trade relations between the European Union and China have worsened, it has become more imperative for Germany to seek other markets. And this week, the Asia-Pacific Conference of German Business in Delhi coincided with intergovernmental consultations between Germany and India on Friday. Now, to highlight India's growing importance, the German government adopted a paper called Focus on India. Now, that aims to further bolster the strategic partnership between the two countries in many areas, including trade, migration, and climate and foreign policy. So Ukraine and Russia will be on the agenda today, and Germany's Scholz will want to speak with Prime Minister Modi about the Indian leader's most recent talks with Russia's President Vladimir Putin during the BRICS meeting earlier this week. But a lot of the meeting will be also about Germany-India economic ties.
All right, can India replace China as a major trade partner?
Well, experts are saying it is not an either-or story. So as German companies look to diversify away from China, they are also choosing to relocate their activities to other Asia-Pacific countries. Now, that's according to a business confidence survey by the German Chambers of Business in Greater China. So it is not just about replacing business in China with India, but also looking at growth potential elsewhere in Asia, in Japan, South Korea, and ASEAN countries, so states like Vietnam, Indonesia, and the Philippines. And as part of that trend, we can expect to see more trade between Germany and India. Now, Germany is already India's leading trade partner in Europe and its seventh largest in the world. And the two countries are deepening their economic ties. Trade is rising, and so are people-to-people exchanges. Germany has passed more than 24 measures to help facilitate immigration from India to attract skilled workers to fill gaps in Germany's labor market. And trade between Germany and India has been rising. Last year, it surged to a record high.
All right, what can we expect from markets in Europe?
Laddie, European stocks are expected to end the week slightly lower, and some are saying today may be the calm before the storm. There's a swirl of events next week. 5 of the so-called Magnificent Seven will be releasing their earnings results. So that is Alphabet, Amazon, Apple, Meta, and Microsoft. And they will all be posting their third quarter earnings over a 3-day period from Tuesday. And a highly consequential U.S. payrolls report is due Friday next week, just days before the hotly contested U.S. presidential election on November 5. But coming back to today, not much is expected on the economic data front here in Europe, Laddie. Germany's leading economic think tank, IFO Institute, is slated to release its business climate survey. And in corporate news, investors will be looking out for earnings from Mercedes-Benz, Sanofi, and NatWest, among others.
All right, thank you so much, Chip, there giving us the information as playing out in Europe. All right, now let's get to some stories now. We see in Zimbabwe, the Ministry of Industry and Commerce is set to launch a new blueprint aimed at addressing bottlenecks choking the growth of the local manufacturing sector. The blueprint, the Zimbabwe Industrial Reconstruction and Growth Plan 2024-2025, will be launched soon, and that's according to the industry minister. The decline in the sector's contribution can be attributed to the high cost of doing business, foreign currency shortages to import raw materials, incessant daily power cuts leading to reduced production, bureaucracy bottlenecks, policy inconsistency, and a dip in local and foreign financing options. On the heavy tax and regulatory burdens faced by SMEs, the minister said the blueprint will explore ways to alleviate these challenges. Adding his vision was for SMEs to have bank accounts and sale machines to widen consumers and payment options. All right, so we see Prospect Resources, an Australian mining company, has announced the suspension of exploration activities at its Bikita gem and step aside lithium projects in Zimbabwe due to underwhelming results and a shift in strategic priorities. The company had turned its focus to these lithium ventures after selling its flagship Arcadia lithium mine to Huayu Cobalt in 2022 for about $378 million. All right, let's get a check on what's happening in the crypto market now. We see it's a Friday trading, and Bitcoin making some kind of recovery, 1.08%, 67,804 points. $804. Ethereum, $2,539, up 0.34%. So we're seeing mostly green on the screen with some pockets of red. Let's look at the sentiment in the market. How are investors feeling? Are they feeling confident right there? No, it says neutral. 56 points, that's the fear greed index some investors use to find entry and exits into most of these markets. Then we see the top cryptocurrencies we track. We see most of those with Bitcoin and likes of Binance and Binance Coin and all of that. Not looking so bad. Cardano up 0.01%, but XRP is going the opposite direction, down about 0.33% at 52 cents. Let's look at some headlines in the market now. We see Bitcoin has added 297 new whales. So Bitcoin whales are on the rise after a new wallet holding more than 100 Bitcoins saw an uptick in the past 2 weeks. That's catalyzed by growing prices and positive sentiments. Data from Sentiment showed that this bullish scenario saw the network add about 297 new Bitcoin whales in 14 days. So I guess if you have over 100 Bitcoins, then you fall into that category. Then NFT trading on Telegram, that's surged. NFT trading, that's according to Helica's Web3 gaming report for the third quarter of 2024. That shows the number of wallet addresses trading NFTs on the Ton network spiked past the quarter in July Daily NFT trading addresses numbered below 200,000 but surged to over 1 million by September. Now we see Binance is delisting about 4 altcoins. They announced the delisting of trading pairs for Rupiah token, Keeper, Uki protocol, and Unify protocol DAO. That's Unify specifically. So, most of the time, Binance, they have to delist, some of these coins. Hopefully, you're not holding any of them because the prices normally plummet when you hear about delistings. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. So looking at Bitcoin price performance this week, I'm sure most of the bulls would be happy, so far this week.
But Ladi, I think it's if you look at the crypto market fundamental, I think it's mixed bag. Look at a tech giant, Microsoft, saying that they won't consider holding Bitcoin because of its volatility. And recall that we have certain large corporations like Tesla and MicroStrategy having a stash of Bitcoin. So that kind of news tells you the concern large-scale investors are having. But that being said, Bitcoin dominance is about 3 months high, and that is very concerning, meaning that altcoins are less impressive. So while we see the appetite for risk high in the stock market, it's been at compromised levels in the crypto market.
Right.
So I think practically, for the bulls in the Bitcoin market, they're waiting all out for the U.S. election.
Right, and looking at most of the listed companies, in Nigeria, coming from the consumer goods side, we've seen the likes of Nigeria breweries. They did announce, they did report Forex losses that actually increased, compared to the same period last year. So, when you see all these other companies, trying to add Bitcoin into their balance sheet, do you think, Bitcoin could be that hedge for foreign currency losses, in a country like Nigeria?
Well, it doesn't look so, Ladi, because if you look at, despite Bitcoin year to date moving above 42%, one will tell you that the preferred choice for institutional investors is gold. From central banks to large-scale investors, the stability gold brings and the acceptance in traditional finance, you can't be compared to Bitcoin. However, Bitcoin is an asset that is evolving, and I think with regulation coming in, at some point we might see it playing in Nigeria. Don't forget that we have certain banks, particularly tier 2 banks like Sterling, having exposure in blockchain technology. Also, the likes of InterSwitch are trying to couple into blockchain technology, bringing services near to the Nigerian financial ecosystem. So it's something that might be a possibility in the future, but with present parabolic situation around the Naira, it's something I don't see coming under President Tinubu's administration.
So do you think some of these companies should buy gold at this point?
Definitely, I think some companies are already holding, have indirect exposure. Don't forget, we have gold listed in the stock market in form of ETFs, and also companies that are exposed to gold like Japan Gold. Yeah, I think we already have institutional investors exposed to that asset.
Right, and we did see, gold has had a monster run, at this point. Do you still see this run getting to about $3,000? Is that possible?
It's a possibility, especially if the Iranian-Israeli conflict escalates. The market is expecting a retaliation from Iran and from Israel, and bookmakers are betting that if the Israelis hit the nuclear or oil installation, definitely might hurt the Iranians bad, and that will heat up the politics. So it's all about what happens in the Middle East and if Trump comes to power.
Right. I guess, at the end of the day, we want peace in the Middle East. Thank you so much.
Exactly.
Thank
you for having me.
Always great having your perspective. All right, so that's how most of the markets are playing out. There's the final trading day of this week. Definitely, I hope you're able to make some profit so you can enjoy the weekend. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.